G'day traders, Stacey Burke from Stacey Burke Trading. Today we're going to be going over my approach to the markets day in and day out for the Asia Closed London Open and the US Market Opens. I'm going to try to explain a couple of simple concepts in terms of how the reason in terms of time of day, why it's important, how I look at order flow or potentially who's controlling the market, bulls or bears, and how then I look to approach the market and identify the best instruments in terms of how they're set up and how we can position ourselves where we can predefine our risk and look for an asymmetrical risk reward opportunity, because every day the markets move. We know that when the banks come to work, especially when London market opens, the volume swells into the market moves, and then as London and New York overlap, we potentially will see a second move. And then as London closes, we'll see maybe a third move, but also a move which can help us establish or identify who's in control or our levels for the next day's trading. So between 2 a.m. and 5 a.m. New York Eastern Standard Time, so it doesn't matter what chart you're using, doesn't matter, I don't care, but between 2 a.m. and 5 a.m. New York Eastern Standard Time, we will often see a high or a low for the session established. Now, as Asia closes and London opens, we will see the volume start to swell significantly, and often in that opening range of the London session, we'll see a breakout or a pullback, which again will allow us to potentially position ourselves into the market depending on what's happened in the Asian session, and participate in a move where we have predefined our risk and we have an asymmetrical risk reward opportunity. So again, 2 a.m. Regardless of what charts you're using in terms of GMT or New York time, I use New York charts, and we'll look at that next. So we go to the next session. This is just last week's charts on the British pound. These red lines are previous support and resistance levels from the week before, from the days before, but we're looking at the hourly charts. Actually, I'll just dial this back a bit. Maybe we can move that chart over a touch to see that that's the 1 hour charts. And between 2 a.m. and 5 a.m. we will often see a high or low for the session. So as Asia closes and London opens, we will see just to reiterate, there's three things that the markets will do, just to rehash. So the markets will either break out, fill more orders, and continue. They will break out, pull back, and reverse. We call that a false break. Or they will break out and go into a range-bound market. So we'll look at different scenarios throughout the different days, but I come to the screen at the Asia close and I look to see what's been happening. So I'll look at other previous support and resistance levels always, and I define a support and resistance level as a swing high or a swing low. And so when we see that, and today we're just going to go over the time of the day and using that as a tool, and we're going to follow this up with some subsequent videos to look at how I use the EMA, how I use support and resistance, and how I use the opening range of the day to help identify where I can position myself into the market. So just for today's video, we're going to be looking at time of day. So again, I would encourage you to look at whatever pairs you're following. Like I follow all the major pairs plus the British pound crosses, and I look at the time of day. So I look at between 2 a.m. and 5 a.m. and then I look at the 8 a.m., 9 a.m. New York times as a second opportunity to enter the market if I haven't seen a setup or I've missed a setup in the London open session. So again, go back, put these times on your charts and see if you can start to use that as a tool with the time frame and the instruments that you're trading. So if we look at just the previous week, we got Friday, Thursday, Wednesday, Tuesday. Just in terms of simplicity, we can go through any chart, it doesn't matter. But we see that in the Asia session, we saw a bullish breakout, two small bear candles at the Asia close. The London Open broke out again, pulled back, filled the gap of the breakout, followed through, and then gave a small bear candle at the top of a range at a previous supply level. This red line is where the previous day's breakout occurred. And we are again enabled to position ourselves and predefine our risk with one bar candle. So again, if we're selling at the top of a range here, the London breakout, we see a breakout where you'd be buying a new high, or if you sold down here, you'd be selling at lows of the London session. So again, think of this as an opening range. First candle that goes out of balance, it pulls back inside of a previous bearish level of sellers. Again, smart sellers would be able to predefine their risk. Shorter term time frame traders may have looked to enter somewhere in after that 5 o'clock candle. So again, the 5 a.m. candle, the high of the session for the day. As we go into the U.S. market open, we see a breakout continue. Now again, there's no reason at all why somebody would try to go long in this market. That's pretty aggressive, but again, the London close at the 11 a.m. candle, between 11 and 12, London market closes. We see a follow through. So if we were to look at the next day's session, we know that the order flow through the London, U.S. Open, London close has been all selling. We're under the EMA. We're just going to look at time of day for this particular video. We'll follow this up in the next couple of days with a couple of other strategies. But again, we see the 2 a.m. candle follows through. We see a retest of the breakout, and then the 5 a.m. candle follows through. But we see the U.S. Open inside of the lows of the 5 a.m. candle. So again, 5 a.m. candle became the low of the session for the day. New York opened up. Candle went out of balance in the pre-market. The U.S. market opened, came back into range, and then trended back to fill the gap of the London breakout. Again, rectangle. We're not going to get into levels in this video, but we'll talk about this in the following videos. 2 a.m. candle breaks out, follows through back with the original order flow. Again, selling order flow has been down. This is just merely a pullback, 3 push pattern back up, sideways into a consolidation, and then a rollover. 2 a.m. candle breaks out. That follows through strongly. So the 2 a.m. candle, although not the high of the day, is at the selling top of the range for the session. We go into the U.S. Open. The 9 a.m. candle breaks out, goes out of balance, becomes the low of the day. So the U.S. market then again reverses and tries to fill the gap of the London session breakout. We go into the next day. So if we were to look at the U.S. session, the session was of buying strength. We get 2 pushes, large push up, an EMA cross. The Friday session consolidates all inside of the range of that bullish candle, and on top of that last bear candle at the London close. So we see the market at the 2 a.m. candle retests the bearish drive down, fails, reverses on the 5 a.m. candle, breaks out back into the U.S. session open, runs the highs of the day, and then fills the gap from Thursday's highs and Wednesday's highs into the close of the week. So again, using the time of day, looking at where the large volume comes into the market, and again looking at 2 a.m. to 5 a.m. as potentially a high or a low for the session, and then looking at the U.S. session as either a continuation or a reversal setup going into that last part of the day in the London close. Hopefully you got some value from today's video. Again, we're going to tie this in with some other significant criteria that will help you put that together and identify potentially the direction of flow for you to participate, whether you're using hourly charts or any other time frame. But these are ranges that when they move significantly, either to continue a move or to reverse a move. And just to sort of give you an idea in terms of movement, usually on the British pound you're looking at on a move of some degree of strength at least 50 pips. If the market is struggling 20 to 25 pips of movement, you're probably sitting in the wrong direction. So I'd be looking to cover that at the breaks of any new highs or lows. But if the market usually pushes through to 40 to 50 pips into the next market open or closing session, again, look for a market to either continue or reverse. So you want to be covering that position and trailing it. If you're 1 hour trailing that every 1 hour movement, or at the breaks of new highs and lows, making sure that you're at break even so that you don't come back and suffer a loss or get stopped out of break even. You want to make sure you're capturing some of that profit. Stay tuned. We'll go into levels and the EMA and using that with time of day and how you can potentially again identify with one bar your risk, and then how to measure some degree of measurement with having asymmetry for profits in risk. Stay disciplined, stay focused, and we'll see you in the next video.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.